Hello, my name is Justin Anderson. Welcome back to the channel. If you haven't already, don't forget to drop a like on the video and subscribe to the channel. First, I'm going to talk about how I invest. So what I choose to invest in and the process I kind of go through for how I choose my investments. Long story short, I invest in what I understand. I invest in things that I see being beneficial in the future. Thinking about my due diligence and the things I actually go into when I do choose to invest and how I choose to invest really revolve around understanding. And if I don't like the company, I won't even really look into it, because if I can't understand something, it's not something that I believe in. I can't choose to actually put my money into it, because I'm supporting something that I wouldn't otherwise believe in and have trust in. Now, this is not a foolproof plan, because, well, I've made mistakes, and this is not a philosophy I've had for the entire time I've been investing. Whereas, there are stocks even recently that I've jumped in without doing a full due diligence on understanding what the company was doing, how the company was doing, where they're going in the future, and understanding if it was actually a good place to put money into. Buy the stocks, buy the ETFs, buy the index funds. Owning those kind of positions comes with risk, and where there's risk, there may be reward, but there are also consequences. A quick note: I have lost money, though. I say lost because if I don't sell a position, I'm not actually losing money. You can see your portfolio go up and down from day to day, and especially recently, the stock market has been on the rise and then falls. What was it? Just last week, 2 weeks ago, there was a 15% decrease in the market. My portfolio alone took a 15% decrease. That hurt to see, but obviously I wasn't selling anything, though everything was on sale and it would have been a great time, but I didn't have the funds ready to put in or just set aside. I didn't have a very high cash balance to be able to capitalize on the sale. Also note that I do not really participate in short sales. Typically, I tried to hold all of my stocks for 366 days. That's 1 year and 1 day. 367 days on a leap year. Once every 4 years, I've experienced one in my time in the stock market. You're going to pay more. You're going to pay different types of taxes based on how long you've owned a stock. So if you own it for over 1 year, 366 days, you're going to pay a long-term capital gains versus a short-term capital gains tax. It's beneficial to try to hold that stock longer rather than short. Plus, if you're really getting invested into the stock market, unless you're looking for day trading, you're looking for that long-term benefit. You're not looking for those short-term gains. Maybe you're looking for growth stocks, but again, most growth stocks, it's going to be very difficult to try to pinpoint getting in right before that stock explodes. What was my most recent quotation mark growth stock that I currently own was the ticker is BNGO. Looks like bingo. It's not bingo. It's a genomics company, but I bought it, and it just so happened that I bought it on that upswing where it was, it was at, I think I bought it at about $4.50, and then it immediately skyrocketed to, I think, $15. Now it's sitting right about $9 to $12 on any given day. So I'm still looking at a pretty hefty, pretty nice size profit. But again, I'm not looking to sell. How do I go about trying to find an investment? Where do I look at when I hear of, how do I hear about some of these stocks that, kind of gets my brain going? And I'm like, okay, that one kind of makes sense. And I'm like, how do I proceed? I'm like, hey, this company sounds cool. Let me look into it, see if I can understand it, see if I'm on board with what their company is about and where their company is going. And that's, a few different tools I use just to learn about different companies. And where I hear about companies, I've used the Motley Fool podcast, which has been really good. They have like 4 different podcasts. So each one's releasing one every week, and they're all different. And that's one key way that I've actually learned to go to find some of the stocks. And they'll typically talk about the stock for a few minutes. And if I'm like, hey, that sounds really cool, that's really interesting, and I feel that I kind of understand that, I'm like, okay, let's do some more research. Let's go in and let's look at, do I understand, am I on board with where this stock is going, or something of that nature. Another thing I'll look at is the the marketbeat.com and Yahoo Invest. Those are some additional tools that I use to research the company. When I first got started, I was really just using Robinhood. And as we saw in the last video, link above right up there, is it's not the greatest for doing your due diligence with a company. It tells you a very minimal amount of context and research for that company. So you should always be doing more. Now, if you're on Robinhood or if you're on Webull, there are, again, with that video that I just mentioned, there are very, very many benefits and cons to each one. One for Robinhood, really good to learn. It's a great stepping stone into understanding the stock market, all that kind of stuff, where then Webull is almost like that next step. Another great point that I look at when I'm looking to invest into any company is thinking about long term, and if I understand that they pay, a dividend. Growing up, not really growing up, but within the last few years, I heard a lot more about dividend or passive income, not dividends. And when I started to really research and understand what passive income is, for me, I really liked the point of dividend income. So stocks are going to be paying me annually on different scales. Sometimes they're annually, sometimes they're quarterly, and sometimes they're even monthly. But these companies are then paying a portion of their profits back to the stockholders at a percent, and then you're getting more of a return on that initial investment. Now for me, I'm using the snowball effect, where I'm just continually rolling my dividend payments back into the stock so that my dividend payments continually increase, and eventually it'll be really, really large. And I'll be able to offset some of my income that I will eventually have when I get a job. But I'll be able to roll that income over and actually offset some of my actual income, and maybe be able to pay for stuff like a vacation, or say something breaks, I have that money to now go and then replace something around the house or whatnot. Again, I do want to start talking about real estate, but I would like to learn a little bit more about real estate, so that topic's going to just be taken backseat until I'm able to actually get involved more with it. But yeah, I really can't wait for that. That's going to be a big portion. I really enjoy learning about and listening, and I really enjoy learning about real estate. And I feel like it's one of those things that, well, everybody still needs a house. Everybody needs a roof over their head. Okay? Real estate is a great way to help people. There are shady people in real estate, but that's not where I'm looking. Additionally, for me, my portfolio was about 52. It was about 5,200 this morning. Again, it paid me out last year about $75, which is down tremendously from where it should have been, due to the fact that a few of the stocks that I did hold stopped paying dividends due to the coronavirus and the pandemic, and they just haven't reinstated their dividends. And I really hope they do that soon, because, well, I do like to be able to see that money roll over into, and continue to grow. But we will see. It's coming. I know it is. And who knows, if it doesn't, I may have to choose to reallocate some of that money into other ventures. You know, I'm building my portfolio on the context that it is going to offset some of my day-to-day income. So, you know, that's something I need. It's something I look for. So obviously I'm making some of my decisions based on that. But, you know, I'm also looking at, I'm trying to understand further, you know, what is a livable wage with dividend income? Okay. If I see livable wage as say $60,000 a year, well, okay, to get $60,000 a year in dividend income, say it pays at 4%, you know, I'm gonna have to sit at about $1.5 million just in those dividend stocks to pay me back a $60,000 a year income. But hey, that's great. Again, thank you for watching the video. If you've stayed around this long, I thank you very, very much. If you haven't already, don't forget to drop a like on the video and subscribe to the channel. And until next time, deuces.